What to do if a market crash happens? As the global economy continues to struggle, so does the stock market. In fact, since January of this year, the value of the major stock market indexes has been declining at a steady rate. But what exactly causes these fluctuations? And how can you handle them if they happen to you as an investor? That's where we come in. If a market crash happens, there are things you should do immediately. Why? Because no matter how well prepared you are for it, it will still be difficult to handle emotionally. When a crash hits you hard, the best thing you can do is pull yourself together and work through it as fast as possible, so that it doesn't knock your emotions and confidence for a loop again in the future. What is a market crash? A market crash is a marked decline in the market value of stocks, commodities, or other financial assets. Crashes can happen for a variety of reasons. The most common are sharp changes in investor confidence, a decline in economic activity, or an unexpected development that causes a major disruption in the financial markets. You don't have to be an insider to know that the market has been experiencing some turbulence lately. How do you know if the market has crashed? Look at the value of the stocks you own compared to the value of other stocks. If they've declined dramatically, then the market has crashed. If you don't own stocks, don't worry about it. Markets go up and down all the time. That's what makes them the most volatile asset on Earth. That said, it's best to be prepared for a crash. How to handle a market crash? The first thing you should do if a market crash happens is to stop reading news and investment articles. The markets are unpredictable, and there's no telling when a crash is coming. Therefore, it's best to keep yourself out of the media's way and just go about your day. If you're not feeling calm and collected, then you won't be able to do anything. Once you've gotten a handle on your emotions, you should get to work on diversifying your portfolio. You don't have to sell all your stocks and move into safer, less volatile investments right away. What you should do instead is slowly move your investments into bonds and physical assets, like gold, silver, and real estate. Doing this will help to protect you in case of a market crash, as these investments don't fluctuate as much as stocks do. After you've diversified, you need to put some money away in a safe place. The best place to keep money during a market crash is a savings account, as they usually offer low interest rates and are insured. You also want to make sure that your money is insured, so that if something happens to it, you're covered. Why do markets crash? As the old saying goes, a fool and his money are soon parted. Markets crash because of two things: unexpected events that cause people to lose confidence in investments, and a lack of interest in investing. If an event happens that causes people to lose confidence, they'll slowly move their money out of the markets until they're completely out of it. This, in turn, causes the market values to decline. If there's a lack of interest in investing, people will put their money in other areas, like stocks, bonds, and real estate, causing the value of those assets to decrease as well. How to invest during a market crash? One of the best ways to handle a crash in the markets is to invest during a crash. If the crash causes people to lose confidence in the markets and move their investments out of the market entirely, then you stand to make a lot of money by investing in that market because no one is there to stop you. The best way to do this is to buy low and sell high. When the market goes down, buy as many stocks that are already at low prices as you can. When the market goes up again, sell those stocks and buy some new ones. This way, you'll be able to make a lot of money without having to put a lot of money into it. Final words: just keep investing. The best way to handle a market crash is to ignore it. If you read news articles and get anxious about a market crash, then you're going to have a really hard time dealing with a crash. The best thing you can do is ignore the market completely until it comes back. If you ignore it, it will ignore you, and you'll come out of the whole thing better off than if you had panicked.